Very good afternoon, friends, and thank you very much for joining us. My name is Ganesh from HDFC Securities, and the topic for today's discussion is the new fund offer from ICICI Prudential AMC, which is the ICICI Prudential ESG Fund. Now, environment, ecosystem, and ethics. How does it impact equity investing? What exactly is sustainable investing, and what are the benefits that one can derive by investing in companies that follow the ESG theme? Now, tell us more about this. We have with us Mr. Santdasani, Senior Manager for Product Development and Strategies. Welcome, Sandeep. Pleasure to have you with us, and it's over to you now.
Thanks a lot. Thanks, Ganesh. Good evening, everyone. Thank you for giving us this opportunity to discuss one of our new offering, which is ICICI Prudential ESG Fund. Broadly, if you see how ecosystem, how environment-related issues is impacting companies, how ecosystem around the companies are going to impact, and how this large companies of India are doing business in form of ethics, how ethically they are doing this business is ultimately going to impact equities in times to come. So broadly, if you see how environment related issues are impacting today, specifically if you see few of the largest cities of India, right, Delhi is in news every year, right? Every year in month of October, November, December, Delhi is in news. It is not in news just because of pleasant environment and winter climate. It is in news because of air pollution, right? Last year, in month of October, November, December, Supreme Court said that living in Delhi is almost equivalent to living in Narc, right? It is almost similar to live in a hell kind of situation in month of October, November, December in Delhi, right? It is not said by us, it is said by Supreme Court of India. And we are not talking about any small city, it is capital of India, which is getting impacted due to environment related issues. This picture, right? By seeing this picture, a lot of you might feel that it is a small town or village, which is where people are rushing to get water. No, it is not a small town or village. It is the fourth largest city of India, Chennai. In size, it is almost equivalent to New York City. 80 lakh people stay in this city, and in month of June 2019, the water resources of this city went to almost 0.1% of the normal levels, right? Clearly, mismanagement of water resources and weak monsoon led to this kind of situation, right? Again, this is not a small city town which we are talking about. It is the fourth largest city of India, which is getting impacted because of environment related issues. Clearly, in times to come, what we anticipate that government is going to get more and more stricter, or in a lot of government policies, the center stage of a lot of decision will be environment related issues. Obviously, why we anticipate, obviously, a lot of this reason also lead to electoral outcomes also, right? What a lot of voting outcomes is also based on this kind of issues only, right? So clearly that is something, a change which is expected. And we are already seeing that gaining environment related issues are gaining prime importance in recent past also, right? What we have seen in Delhi, odd even was introduced. Right now we are discussing what government did. I am not trying to highlight whether it was a successful initiative or a failure. We are just trying to highlight where the direction is, right? Where the direction of government actions is, right? In budget 2019, incentives were announced for people who are buying electric vehicles, right? Tax benefits were announced for people who are buying electric vehicles. India skipped BS5, right? We went from BS4 to BS6 in terms of pollution norms of a lot of vehicles, right? We went from BS4 to BS6. We skipped BS5, right? Again, that shows that clearly the intention is to focus on environment related issues. Apart from that, obviously on social related issues also government is focusing a lot, right? In single month, 15,000 people are fined for smoking in public places. Again, there can be argument on whether it is something which is very impactful, or it is lesser impactful, or government can do a lot of things in this area. Clearly, in times to come, the changes will become even more stricter over here, right? And the environment we are into right now, right? Entire world is grappling to pandemic kind of situation. COVID-19 is not impacting only one country or two country, it is impacting entire world. Obviously because of that, what will happen, this sort of issues will get more and more importance, right? ऐसे इन issues को और ज़्यादा importance मिलेगा आने वाले time में, given the condition we are into. Clearly the COVID-19 has come as an unexpected catalyst, right? It was not expected कि ऐसा कुछ होगा जिसके कारण से the world will change completely, right? In month of November, December, if you would have thought, clearly ऐसा कुछ expectation नहीं था कि COVID जैसा situation आएगा, but it has come as an unexpected catalyst, and because of this, lot of things which we were expecting to happen in 2030 or 2025, next 5 years, 10 years down the line में जो changes expected थे, that all changes are happening today, right? The pace of change has increased significantly, right? To highlight a few, the way we used to work has changed completely. The way we used to shop has changed completely. Our entertainment has changed completely. Our education system has changed completely. The way today education is given to our children has changed completely, right? The way we socialize has changed completely. In normal course, obviously, this sort of session would have happened, either we would have come to your place or you would have come to our place for this sort of session, but today we are doing it on an online platform. Clearly the COVID-19 has came as an unexpected catalyst, right? If somebody would have told you in month of December or in month of Jan that next 5 months you will not be able to go office, and despite that your productivity will not drop significantly, obviously बहुत कम लोगों ने उस पे believe किया होता कि not going to office and despite that productivity will not drop significantly, that can happen, right? But that happened, and obviously अगर आप 2-3 दिन पहले का business standard newspaper उठाएंगे, 3 दिन पहले का business standard newspaper देखेंगे, on the first page, CEO of Infosys said that working from home is happening smoother, and that can remain even after COVID-19 situation normalizes, right? So that is a change which was expected to happen 5 years, 10 years down the line, but that is happening because of COVID-19. Digitization pe already government was focusing, right? Clearly we had ecosystem which was already getting built since last 3-4 years, UPI and all that things, that sort of infrastructure was getting built in terms of online payment and all. Because of COVID-19, digitization increased significantly, and today we are actually doing a lot of online transaction and paying people online, right? That sort of change has happened because of COVID-19. Clearly our entertainment has changed completely again in last few years. If you see, slowly gradually we were moving towards that side, but because of COVID-19 that has happened faster. Education, if you see, obviously अगर आप देखें education में since last so many years we were having discussion that in smaller places and villages where a good teacher cannot reach, we can have an online form of education. Clearly because of COVID-19 that culture is getting more and more popular, right? If you see across places you will find these sort of changes, and clearly being responsible for your action is at the center stage of all communication which governments are doing. Not only Indian government, across the globe, lot of governments are doing this initiative of being responsible, right? Every communication is centered around that, right? Even if you step out of your house, your family member reminds you to be responsible, because if you are not, ultimately it is going to impact you, your family, and to the society, right? Investing responsibly, which is one of the fastest growing theme in developed countries, right? Again over here also the change is expected to happen much faster. Domestically also we are seeing that sort of traction, and why I'm saying this, clearly that is visible in in our population, right? The population which we have, right? 65% of the population which we have is around 35 years of age. We have young population which is aware that if they don't take care of environment, ultimately environment is also not going to take care of them, right? That is visible the most in our way of celebrating festivals. Eco-friendly Holi's, eco-friendly Diwali, eco-friendly Ganesh Utsav. Clearly that is all visible in our way of celebrating the festivals. Clearly that change is also expected to happen in investing also in times to come, and obviously the ecosystem is getting built, and because of that ecosystem being built, we have launched our fund which is called ICICI Prudential ESG fund, which encourages sustainable investing by investing in companies that follow ESG, right? So what is ESG? companies which are showing empathy towards environment, companies which take charge of social responsibilities, and companies which take charge of good corporate governance, demonstrate excellent corporate governance. These sort of companies qualify high on ESG, right? So this sort of investment is called sustainable investment, and in times to come, this is a theme which is expected to do significantly well, right? So why sustainable investing? What is required for any business to have sustainable investing or sustainable business model, right? Three P's are required for any business to be sustainable, right? These, what is three P's? The product which companies are manufacturing or services which they provide, what people they have, how they are treating the people. Again, that is very important. And third is processes. I'll highlight over here how they make business more sustainable, right? So what you are producing, right? Which product you are producing, that is very important. And second thing, how you are producing, again, that is also very important, right? So let's say if I am a manufacturer of sin products. Sin products mean a cigarette manufacturing company or a liquor manufacturing company. Clearly, this sort of companies does not go well with social values, right? Obviously, because of the lower social value of this product, this does not qualify under ESG investing, right? Now, how it is impacting our profitability also, right? Again, social value के वजह से these products are not qualifying in ESG investing, so that is something which is there. But how it is impacting profitability of these sort of companies, right? Every year, if you see before budget, in companies के stock prices are under pressure. The reason behind that is the expectation that government will come and put some taxes on this sort of product, right? Taxes बढ़ेंगे in product में, because of which the profitability may get impacted, and because of that the stock volatility increases significantly prior to budget event. अपार्ट फ्रॉम दैट, और कौन से रेगुलेशन इम्पैक्ट करते हैं इनको? गवर्नमेंट अनाउंस करती है, गवर्नमेंट रेगुलेट करती है ऑन पैकेट्स, राइट? ऑन सिगरेट पैकेट यू हैव टू कीप 80% as a warning, right, on your packet. Now on a product which you are trying to sell, 80% of that is covered that it is going to harm you, right? Ultimately, it is a regulation which is negative for marketing this product, and clearly because of that they might not have sustainability in form of investing. The second example, the product which you are producing, how you are producing, again, that is very important, right? So if there are two manufacturing companies of chemical manufacturing companies, one which is taking care of environment related issues, the second one is not taking care of environment related issues, and a lot of discharge are there which are impacting environment, right? Either it goes to water, or it goes to land, or it goes to air. Ultimately, environment is getting impacted because of not having mitigants, right? क्लियरली क्या होगा, ये जो दूसरी कंपनी है जो एनवायरनमेंट का ध्यान नहीं रख रही है, उसकी प्रॉफिटेबिलिटी ज्यादा होगी, बिकॉज they are not taking care of mitigants and all, and because of that the profitability might remain higher for short period of time. The first one, which is taking care of environment, which is taking care and putting a lot of mitigants through which they'll not pollute the environment, clearly ये company future ready है, because आने वाले time में जैसे regulatory changes आएंगे, and when it becomes even more stricter, this company is future ready, and that company will gain lot of market share from the companies which are not taking care of environment, right? So big companies, quality companies which are taking care of environment will grow bigger and bigger. The second is people, right? How companies manage relationship with their employees, labor, suppliers, and local communities. That is also going to impact the sustainability of business. I'll highlight examples over here. Now, while highlighting examples, I may take some companies' name. That does not mean that we are going to invest in these companies. I am just taking example just for illustration purpose, right? So to give you an example over here, Asian Paints in month of March, April, what they did when the entire country was entering the lockdown, right? Lot of companies had delayed their increments. Lot of companies had cancelled their increments and their bonuses. This company not only gave increments to their employee, they also supported their contractors and distributor, right, by providing them either lower interest cost loans, or or by supporting them by doing direct benefit transfer, right? So they did direct benefit transfer to almost 40,000 contractors, right? When the economy will open, right, जब situation normalize होगा, economy open होगा, and if as a distributor or contractor I can sell different types of paints, right, different companies paint, uh, obviously my loyalty for this company which has supported me in bad times will go much higher, right? And because of that, the company is going to gain in long period of time. So clearly, by supporting people, right, the company is going to get more and more market share and more mind share, right? So again, taking care of people, having good policies is going to invest your sustainability. And third is processes, right? How your board is, how your statutory auditors are, how your financial reporting happens, how you take care of minority shareholders. Again, having good processes, right, helps you a lot, right? What we have seen clearly in last couple of years, a company which is well governed, well managed, in the same sector, a company which is poor governed and poorly managed, right, the first one will get much more market share and much more higher price multiple compared to the second one, right? So having good processes which is taking care of a lot of issues which may come in future. Clearly, these three P's are very important for having sustainable investing, right? But for investors, right? For investors, none of these three P's are very important, right? Investor के लिए सबसे ज़्यादा important क्या है? वो ये तीनों P में से कोई भी एक P नहीं है, right? And that is something a separate P altogether, and that is profitability, right? But if you have good product, right, and which is also made with a mitigants which will take care of lot of issues which may come in future, right? You will build loyal customer base, right? If you have good product, you will build loyal customer base. If you have good policies towards your people, you will attract best talent which is available in the market. And if you have strong processes, strong corporate governance oversight, will mitigate a lot of potential risks which may come in times, right? Because of all these three P's, ultimately you will get the fourth P, which is very important from investing point of view, which is profitability, and that will be much more sustainable, and can give you much uh, 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 returns in longer period of time. And all this will happen by positively impacting planet, right? So if you follow all these three, clearly you will score high on ESG, and that is something which will give you sustainable investing, right? So when we talk about ESG, the first thing comes to our mind is that it is something charity which a lot of companies are doing. Actually it is not, right? It is actually making your companies much more sustainable and much more resilient for long period of time, right? So I'll give you a few example of leading companies of India which are on sustainable path, right? So आपके स्लाइड पे एक आम का बागान दिख रहा है, right? मैंगो ऑर्चर्ड दिख रहा है, right? So it is not a company which is into agriculture space, right? It is I am giving example of one of the largest company of India which is into refining business, right? I'm sure you would have guessed the name. It is Reliance Industries, right? Again, the stocks names are just for illustration purposes. In 90s, they were continuously getting notices from Pollution Control Board because around their refinery there was lot of wasteland, right, and which was creating issues for this company, right? After getting lot of notices from Pollution Control Board, what they did, they converted this wasteland into green belt, and they planted close to around 1.3 lakh mango trees of 200 different types. 200 टाइप 200 अलग अलग टाइप प्रकार के मैंगो ट्रीज उन्होंने प्लांट किए, ऑलमोस्ट 1.25 लाख ट्रीज उन्होंने प्लांट किए, राइट? what happened after this? Obviously the environment related issues dropped significantly because obviously because of plants, and the pollution level came significantly down, air quality improved significantly, water level went up in that area, and because of that, obviously whatever problem they had from pollution control board, that also was taken care of. Clearly what this company did, they took an opportunity, converted the wasteland into a green belt, and created a good environment around their manufacturing facility. And as an outcome, today they are one of the largest mango orchard of not only India but of Asia, right? So this company created an opportunity. The second example which I'll give you is cement manufacturer, one of the largest cement manufacturer of India, right? What they have done recycling and reusing of the 100% water which is generated from the plants, right? So they have treated water treatment plants, and they treat the sewage water also. And because of that, what is happening today, they are only using 72 liter of water to produce 1 ton of cement, while the global average is 300, right? So 300 लीटर वाटर का यूज करती है global companies to produce 1 ton of cement, while this company is only using 72 liter of water to produce 1 ton of cement. What I mean by saying this, these companies are future ready, right? आने वाले टाइम में जब वाटर स्कैर्सिटी और ज्यादा एक्यूट होगा, these companies are future ready, right? आज के दिन ही अगर these companies are using only 25% of resources, right, natural resources, clearly that shows that these sort of companies are future ready, right? uh, the third example which I'll try to highlight is a two-wheeler manufacturer, which is one of the largest, world's largest two-wheeler manufacturer, right? इनका नया facility आ रहा था in state of Rajasthan, right? And I'm sure you would be aware about the climate of Rajasthan. It is a hot, arid climate in Rajasthan. While they were constructing this facility, they designed this factory in form of garden, right? इस premises के सारे walls, सारी ceilings are in form of garden, right? Garden wall and garden ceiling, right? जहाँ पे बाइक्स मैन्युफैक्चर होती हैं असेंबली लाइन पे, असेंबली लाइन से लेके रूफ टॉप तक एंटायर वेजिटेशन इज देयर, right? What they got by doing this, obviously air quality improved significantly, temperature went down significantly. Clearly it was a pleasing environment over there to work, and by doing all this, obviously they created a good working environment for their employees. So ऐसी 88 companies available हैं in large cap space, which are identified based on ESG score, right? And this fund is trying to invest into this 88 companies. Out of this 88 companies which are future ready, right? They are already taking care of a lot of environment related issues. They are already taking care of their people and stakeholder around their company, and they are excellent on corporate governance standard also. So clearly this sort of 88 companies are future ready, and the fund is going to invest in these sort of companies. Out of these 88 companies, we'll try to build a portfolio. Now, what will happen if you are weak on ESG standard, right? So bigger risk is to business, right? What is regulatory risk, right? Government can ask companies to adopt a lot of environment regulation, and because of that, the cost may go high, right? We took an example of chemical companies, right? Clearly, in times to come, environment regulation may come heavily on this sort of companies, and your cost can go high if you're not already adopted to this eco-friendly, environment-friendly laws, right? So clearly, if companies are already future ready, they not have to increase the cost in future, right? So they have already set up their facility in such a way that they are future ready. What can be the physical risk? Obviously, if climate changes, and because of that also there can be a lot of physical risk which may come to your company in form of floods, in form of droughts, right? Clearly that can impact your businesses, right? If you have a flood around your area, and if factory remains closed for 5 days, 7 days, ultimately it is going to impact your profitability. If you don't take care of employees, how it is going to impact you, right? If you don't take care of employees, laborers, you can have more strikes and factory lockdowns. Clearly in last couple of years we have seen large company, if faces a lockdown or strike kind of situation, clearly they lose out on profitability. But as a byproduct, right, if you have weaker ESG, any environment related issues or any social related issues, any governance related issues, if you are weak on any of these three, you will attract lot of negative publicity, right? Negative media you'll get. And we have seen in recent past that a negative news can make your stock prices or your company's image so bad in the media, and ultimately it is going to impact your stock prices, right? So anything which is weaker on this parameters is going to impact heavily to these sort of companies, and because of that, lot of large companies are slowly gradually adopting this ESG standards. So as the world is getting hotter, right, as the world is getting hotter day by day, ESG is becoming the hottest thing in investing world, right? And that is visible in developed markets, right? Since last 10 years, last 7 8 years, we have seen the change in this trend, right? Europe In Europe, the AUM under this ESG theme was $10 trillion in 2014. From this $10 trillion till 2018, they went to $14 trillion, right? Again, to highlight, our economy size is almost $2.5 trillion, right? So we are talking almost 7 times more than our GDP size, right? We have seen in last 4 years how the change has happened in developed markets. And that trend is also visible in United States, Canada, Australia, New Zealand, Japan. Across these countries, if you see, the AUM has grown significantly in last 14 15 years, right? So it is a theme which is gaining a lot of traction in developed countries, and because of environment related issues and the way government is at this point in time in this pandemic environment, the change in developing countries is also expected to happen much faster, right? So in traditional way of investing, what we used to focus on, in traditional way of investing, we used to focus on financial parameters, right? How the company's balance sheet is, companies का balance sheet कैसा है, profit and loss statement कैसा है, valuations कैसे हैं, growth opportunities कैसा है, right? All this we used to see when we used to see financial parameters of any sort of companies. By responsible investing, another filtration which comes in form of ESG parameters, right? A behavioral filtration will come, right? How companies are taking care of all these issues which may come in future, right? How the companies are taking care of environment, how companies are taking care of social related issues, how companies are taking care of governance. Clearly, all this will create a brand of a particular company, and clearly what we have seen in recent past, a strong brand give you much more sustainability and much more productivity in long period of time. So by having this filtration, clearly additional filtration of behavioral will give us edge in this fund, right? So governance already we were focusing on, right? Governance was a parameter which we were focusing on, but in this fund clearly ENS also form a significant part while we filter out the stocks where the fund will invest into. Now imagine a situation as a global fund investor, right? A person who is not sitting in India and he is sitting outside India, right? And where the ESG is so important, right? And a theme which has done so well in last 10 years, right? As a global fund investor, when I'm investing into India, what I have to see? Why I have to see just that uh, in India, how many companies are there which are scoring high on ESG, right? Then I'll find this 88, 100, 120 companies are companies which are scoring high on ESG. Then I'll see out of this 120 companies, which are the companies which gives me excellent growth opportunity and are available at a reasonable prices, right? So as a global fund investor, my work will become more easier when I see from ESG lens point of view. I'll get good quality companies which can give me sustainable growth opportunity, and then I'll see valuation, right? So in times to come, 1 year, 2 year, 3 year down the line, this is a filtration which will become more and more important. The importance of this filtration is going to go high multifold, and if you are investing today in this fund, clearly your portfolio will be future ready, right? So 5 years, 3 years down the line, when the trend becomes so strong, clearly these sort of companies are going to give you much better return experience, right? So in recent times also, what we have seen, despite the flows being volatile, the flows in ESG theme has remain much more stable, and they have seen a uptick, right? Even in emerging markets, the right hand side of the chart, which shows that while the flows in all equity, the darker line was volatile, while the ESG flows were much more sustainable, right? So that trend is also visible in emerging markets also, right? So I spoke about ESG a lot, right? But for investor, what is more important, right? How it is going to impact my returns, right? As an investor, I am my focus is on my returns, right? And that is not wrong also, right? Ultimately, my hard-earned money should give me the best of return which is possible in the market, right? So how ESG has impacted returns? So from 2011 till 2030, last 10 years, if you see, 100 invested in Nifty would have grown to 120. 100 invested in Nifty would have grown to 200 rupees, while 100 invested in Nifty 100 ESG index has grown to almost 230 rupees, right? So by investing into ESG in last 10 years, and by doing nothing, I have got more 30% more return by investing into ESG companies compared to Nifty 50, right? So clearly in large cap space, if I have just made a filtration of ESG companies, my return would have been 30% more by investing into ESG companies, right? So while markets moving up, ESG companies have given much better return experience, higher return experience compared to the markets. The very important fact over here is that when markets were correcting, while markets were falling, the ESG companies have shown more resilience, and because of that, they have corrected much lesser. That number is visible in YTD performance, right? Start of this year till date, if you see, Nifty is down by 7%, while ESG is down only by 1%, right? So it has recovered lot of lost ground in this last 7-8 months also. If I compare last 9 financial years, Nifty 100 ESG index has outperformed in 7 financial years. If I compare calendar years, out of 8 calendar years, Nifty 100 ESG index has outperformed Nifty 50 in 7 calendar years. So across time periods, 1 year, 2 year, 3 year, 5 years, point to point, a down cycle or an up cycle, clearly that is visible that these sort of companies have shown much more resilience compared to the broader market and have given a better return experience to investor, right? Even in turning point, right? The turning point of the market was from the bottom, right? From 23rd March 2020 till date, if you see, 100 invested in Nifty has become 150, while 100 invested in Nifty 100 ESG index has become 153. While if you see any large cap fund which is available, the average return is between 140 to 150, 145 to 150 to be precise, right? So clearly beating Nifty 50 had been very difficult for any large cap fund also in this short period, but Nifty 100 ESG index has clearly outperformed in this short period also, right? So while markets were correcting, the Nifty 100 ESG index corrected much lesser compared to the broader market, while markets were recovering from bottom. Clearly Nifty 50 delivered 52% return, while Nifty 100 ESG index delivered 55% return, right? So while the broader market is yet to reach the previous peak, right? The Nifty 100 ESG index has already recovered lot of lost ground, which happened in last 7-8 months. So where are the investment opportunities where this fund can invest? There are 88 companies in large cap space which score high on ESG where the fund can invest into, right? And the universe is available. The options of investments are available across the sectors. It is said as a thematic fund, but if you see, the universe of this fund will be across the sectors, right? The fund can invest into oil and gas. Companies are available in oil and gas space. Companies are available in IT space. Companies are available in financial space, consumption space, infrastructure space, uh, telecom space. So across baskets, the stocks are available, companies are available which are scoring high on ESG. So it will be a diversified portfolio which will be investing across the sectors. So it will be not specific to one or two sector or 5 sectors only. It will be a diversified portfolio which will be investing across different sectors. Apart from that, the fund also has the potential to invest up to 30% into foreign securities also. So I spoke about India ki achhi company which are scoring high on ESG, but uske alawa this fund can also invest up to 30% into foreign securities also, right? So the global securities which are scoring high on ESG, the fund can invest up to 30% into this global securities also. जैसे कि Amazon, Netflix, Google, Alphabet, then you have Microsoft, Johnson and Johnson, ऐसी सारी कंपनीज जो ग्लोबल स्पेस में अवेलेबल हैं, और जिनका ESG स्कोर भी अच्छा है, and which have shown great resilience and great growth opportunities in last 12 15 years. That sort of companies also the fund can participate into, right? So in companies के product तो हम लोग use कर रहे हैं, but we are not able to participate in the profitability of this sort of companies. The fund has potential to invest in this sort of companies also. So ये portfolio होगा जहाँ we can take as of now we will take more of large cap allocation. But जैसे जैसे mid and small cap space में भी if we find lot of ESG companies, and in times to come, obviously, a lot of companies will be willing to qualify in ESG. So the fund has flexibility to invest into mid and small cap space also. Now coming to timing of the NFO, right? So the fund is opening on 21st of September, which is today, and in the NFO is closing on 5th of October. Now, why the fund is timed uh, at this point in time, right? So in month of November, we are having a key event in terms of US election. Apart from that, also there are a lot of key events which are happening right now, right, in terms of geopolitical tensions which we have in our country, right, border related issues or tension which are going on right now. That is again because of which there can be volatility, right? So there is one US election because of which there can be volatility. There can be geopolitical reasons also because of which there can be volatility, right? So there are two options as an investor which I can take, right? Either I can invest in any of asset allocation schemes, right, where the fund can take increase or reduce the equity allocation based on the valuation. The second option is by investing in these sort of NFOs, right? Now, clearly, ICICI Prudential ESG fund is expected to take benefit of volatility if it comes in month of October by doing gradual deployment. Fund manager एक साथ पूरा पैसा इसमें deploy नहीं करेंगे. They'll do gradual deployment and they can take benefit of volatility which is present in the month of October or in month of November or even in month of December. So gradual deployment strategy, which again NFO can take, and because of that we have launched this fund in such a way that the fund manager will get inflows in first week of October, and then gradual deployment over the period of time can give a good return experience to investor, right? Clearly in our older NFOs also, if you see, we have done gradual deployment. If I talk about MNC fund, PhD fund, Bharat Consumption Fund, or Manufacturing India Fund, we have done gradual deployment across the new funds which we have done, and that strategy we may use in this also, right? So why should I invest? To summarize, why should I invest in ESG fund? Companies are less likely to be impacted by any regulatory changes which may come to save planet, society, or to maintain governance standard, right? So we in recent past only we have seen uh, 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 regulator has come and changed the board, right? If it is not governed well, regulator has come and changed the board. Recently we saw in one of the private sector bank, in 2018 we saw in one of the leading infrastructure leasing finance company. In 2009 we saw in one of the leading IT companies of India. When the governance standard are weak, and if it is not taking care of minority shareholders or shareholders, right, clearly regulator has come and changed the board, right? So these sort of companies are less likely to be impacted by any regulatory changes, right? Either it comes to save planet, or to take care of employees, or to take care of governance related issues, because these sort of companies are future ready, right? Sustainable companies have lower business risk and can give sustainable growth, and which is the most important thing to get equity returns, right? So if you have sustainable investing in sustainable companies, clearly that can give sustainable growth. Theme is at the nascent stage, right, in developing markets, including India, but has the potential to grow much faster, right? So as we saw in developed countries, it is one of the fastest theme which has grown in last decade, right? And in emerging market also the trend is visible, right? But in emerging market still it is at the nascent stage, right? But the potential of growth is very high, right? So we are creating an ecosystem right now Once the ecosystem is ready, obviously in India also there can be a lot of flows which may come into ESG related theme. And if you have this fund in your portfolio will benefit out of that increasing penetration of this theme. The fourth point is that apart from domestic equity, apart from good quality sustainable companies of India, this fund also can invest up to 30% into global companies which are scoring high on ESG and which have shown excellent growth opportunity in last so many years. The fifth and last point, why I should invest today, right? Well begun is half done, right? So scheme may do a gradual deployment, and obviously there can be a lot of volatility which may come in future, and the fund because of its gradual deployment strategy can benefit out of the present market situation. So these are the 5 points why I should invest at this point in time in this NFO. Right. So NFO is opening today. It has opened today and is closing on 5th of October. There are both options available, growth and dividend. Investor based on their requirement can choose any of the option. There is 1 year of exit load. Post 1 year, there is nil exit load. There is no exit load after 1 year. SIPs are available, lump sum and SIP, both investment options are available. The Nifty 100 ESG index is the benchmark of this fund, and Mr. Mrinal Singh, who is our deputy CIO, is going to manage this fund. So with this, I'll stop here and would be happy to answer any queries if you have.
Yeah, thanks, Sandeep. I think it was quite an insightful session as to what this ESG theme is all about. We do have some questions. We have just enough time for a couple of questions, so I'll take it one by one. The first one is from Mr. Guru. Does this mean that fossil fuel companies or hydrocarbon companies, the typical names that you can think of, be a Reliance, BPCL, HPCL, or cigarette manufacturing or liquor companies, are they in danger? Will they go out of business?
So as I said, fossil fuel companies, obviously they are doing a lot of mitigants. We took examples also, highlighted few examples over here. So they are doing a lot of mitigants, and because of that, their score is not very low, and because of that, they are qualifying in ESG, right? But renewables and all that sort of things are something which they are trying to do. So to give you an example, NTPC is not part of this index, but recently they said that in next by 2030, next 10 years, they are planning to have 30% of their capacity which should come from solar as a source of energy. So clearly these sort of companies are also aware about the situation which is there in market, and they are getting themselves aligned with the fact. So mitigants is something which is very important. How companies are taking mitigants to resolve that issues is making them future ready. So clearly these sort of companies score high based on their mitigants which they are incorporating. Obviously, cigarette manufacturing company, which I gave an example of, obviously their scores are not very high because of social that products are not going well with the social values, and because of that they will not qualify under ESG as such, right? But let's say a company like ITC, they have a lot of FMCG business also, right? So there had been a lot of discussion around this for a very long period of time, that there can be some demerger sort of thing which may happen, and the cigarette business can be separate, and FMCG and hotel business can be separate entity, right? So that sort of business, a demerger kind of thing, will benefit the company in times to come, right? So we'll evaluate, but at this stage, obviously, cigarette manufacturing company which is getting 40% of revenue out of cigarette clearly does not go well with the ESG framework, and this fund will not invest into that stocks.
Great, thanks for that. The next question is, what would be the market cap allocation in terms of large cap, mid, and small?
Okay, so right now it will, as I highlighted, there are 88 companies which are scoring high on ESG in large cap space. Apart from that, there are few which are available in mid cap space also, and small cap space also, right? So as of now, it will be more of large cap, but the way change is happening, a lot of companies are also willing to get themselves qualified on ESG parameters, right? Because someone who is sitting outside India, clearly if is taking stake in company, they are asking questions, right? In their due diligence document only, they are asking how much you are taking care of environment related issues, what activities you are doing to take care of environment related issues, and social related issues. Clearly, in recent past, G factor has seen the importance, right? Governance factor has clearly seen the importance in India, right? We have seen a good governed company has traded at much higher valuation compared to a poorly governed traded company in the same sector. Same way, a lot of mid and small cap companies in times to come are expected to become scoring high on ESG, and the fund will take exposure into that sort of companies also. So at this point in time, it will be more of large cap, less of mid and small cap. But in times to come, let's say 1 year, 2 year down the line, it will be more of multi-cap, and it will also have, apart from domestic exposure, it will also have global securities exposure also.
Sure, thanks. The next one is another follow-through question by Mr. Guru. Is there an ESG score or a rating that is given to companies by some regulatory body?
So it is given by a lot of agency, not a regulatory body, but it is given by NSE India, right, which is the benchmark of this fund. Nifty 100 ESG index is the benchmark. NSE is providing ESG scoring. Apart from that, MSCI from global stock side, they are providing. Morningstar is providing. There are a lot of agencies which provide scoring on ESG. It is not regulatory body, but they are actually index provider kind of things. They are providing. But government
Okay.
regulator is asking a lot of disclosures, and because of that disclosure, this ESG scored are based on that disclosure only, right? So disclosure requirement is something which is asked by a regulator, and based on that disclosure, what they are doing for environment, what they are doing for social related activities, right? Governance, how they are taking care of statutory auditors, right? What is their remuneration? What is the board balance, right? How many independent auditors and all that. So that is something which is given by regulator, and based on that disclosure, the ESG scoring is happening.
Okay, great. Thanks. The next one is from Mr. Siddhant. What are the weights regarding the ethical parameters that are being used? Does corporate ethical governance weigh less than environmental impact while calculating ESG score?
It is an aggregate score. All three are getting aggregate score for this fund. So this will be a fund which where we will be relying also on the scoring of Nifty, NSE, apart from that Morningstar, and apart from that MSCI also. But to give you a filtration, the fourth filtration, which is again very important, is our internal research analyst team. So we have people, around 18 people team in research analyst space, right, which takes care of, apart from this agencies, they also have internal mechanism, right? And because of that, if you see from governance point of view, a lot of accident which happened in last couple of years, fortunately we were not part of any of that accidents, right? And because of the focus on governance, that is followed in all our fund, and here the filtration will be even more stronger in terms of environment and social related issues. So it is an aggregate score which comes from these agencies.
Great, thank you for that. We'll just take the last couple of questions. Okay, so how different would this be from the peer group funds? And I'm coupling two questions basically. And why should a person look at this fund, and how does this compare with the funds in the with similar funds? And why should one look at this fund?
Right. So it is a theme which is gaining traction in India. There are only few options which are available in the market, and we are one of the first few to launch this fund, right? So there are 2-3 funds which are available already in the market. Now, obviously that depends upon the portfolio positioning also, right? So I would not be in position to highlight exactly how I am aware about how they are positioned there in portfolio terms, right? So our portfolio will be more a balanced approach, right? We will have more growth oriented, growth at reasonable prices approach, rather than having all quality approach and investing into all expensive names. We will have more of a growth at a reasonable prices kind of approach. So it will be both growth and value approach which we will be focusing over here. A lot of funds which are available in this space are investing into very high quality names which are also very expensive, right? So our thought over here is that to invest into companies where both things are available. Valuations is paramount in any investing, right? So valuation is something also which we will be looking at while investing.
Great. Thanks. We'll just take the last question for the day, for the session. Uh, You did touch upon the market cap dispersion for mid, large, and small. However, this question is slightly similar to that from Mr. Ketan. Any SEBI regulations as far as the percentage investment in large, mid, and small is concerned? This also comes if there is some regulation considering the recent multi-cap change that recently occurred, which
Right.
SEBI made mandatory.
Right. So over here, there is no restriction to fund manager based on the attractiveness of the market cap. The fund manager take a call to increase large, mid, small wherever the opportunity is. So there is no such restriction. This is not a multi-cap category fund, and that advantage will be there with the fund manager to increase market cap wherever the opportunity is the best, which is available in the market. So fund manager uh, uh, based on their take on the market, they can increase large, mid, small wherever the opportunity is. So it will be a flexi cap mandate in that way.
Okay, we'll just take the last question which just popped up. What is the expense ratio on this on the fund?
So it will be based on how much AUM which we are raising, but normally the expense ratio will remain between 2 to 2.25% kind of number. So the number will remain same as it is obviously regulated by regulator only. So that way the expense ratio will not be too high. It will be normal equity fund expense ratio only.
Great. Thank you so much for that, Sandeep. I guess we'll have to end this session here due to paucity of time. Thank you so much, dear investors, for sharing your evening with us. We do hope you found this session insightful and definitely you will find value in this fund. Thanks a lot, Sandeep, for a wonderful session and thank you so much for joining us.
Thanks a lot. Thank you everyone for joining in. Thanks.
Sham, we can close the call.